Welcome to the latest episode of UNBIND with Bindable. I'm your host, Jocelyn Getson, Chief Growth Officer at Bindable. So, new year, new projections. We're all getting out our crystal ball and thinking, what's next? And excited for today's episode because I have Nick Lamparelli joining me to discuss what 2022 is going to bring to the insurance industry. So, in regards to the ever-evolving, expanding technology, the partnerships, the consumer preferences, we really want to tap into where the space is headed beyond just 2022. Where are we going? What's working well? Where should organizations be focusing their time, their attention, their resources? So the goal really in general should be about keeping up, not so much about keeping up with the times, but trying to get ahead and leading the innovation. So really excited to have Nick to join me to tackle the topic. These are big open-ended questions, and Nick's a man rarely short of ideas or opinions or words, which is why I love him.
Yeah.
So, and as the co-founder and head of innovation for Rethought Insurance, Nick is a tech-centric MGA focused on closing the protection gap for property owners' exposure to natural catastrophes and specifically flood exposures. Nick, you're also a former modeling executive at QBE and Marsh, and you've been a broker, underwriter, risk analyst, and been in insurance for 25 years. So really, who better to tackle? So welcome.
I've seen it all. Thank you.
I know. And when I first read it, I was thinking that you were a model, and I was, naturally thought that makes sense. But even modeling, I guess that's.
But then I log into Zoom and you're like, nope, not a model.
Yeah. Well, listen, I like to start at the beginning. So I'd love if you could just tell me, the audience, a little bit kind of about yourself, but also how you ended up in insurance.
Sure. The story I rarely ever tell was, I was a biology major in college and had big plans to go to medical school or to do research. And when I finally got my chance to go to grad school / medical school, I only lasted one semester and ended up leaving and getting into insurance. So that's like the interesting backstory.
Well, it's how things all work together. So it kind of makes sense, right? I mean, I guess biology gets you in that. But yeah, it's a stretch.
Yeah, the gentleman that got me into insurance told me when I was disheartened at having to go to graduate school, said, come to insurance. Everybody has to buy it. You'll make a lot of money. It was pretty much what I needed to hear at that time, but he was pretty much exaggerating all of that, and I had to learn that the hard way. But as soon as I got in, I was interested. So with a science background, I'm very comfortable with numbers and processes and scientific reasoning. It's something that I still enjoy doing, thinking that sort of way. So it actually came in quite handy. But the interesting thing in like risk markets is everything happening so much faster. Science is so slow, right? That's what I didn't like about it. I didn't have the patience to wait for things to happen. And in insurance, things happened more quickly. And just worked my way up from agent broker to, something bigger, getting into middle market and then commercial property. It's when I found catastrophe modeling about 15 years ago that I had that pivot in my life where it was like, oh, wow, like there's so much science and engineering and numbers and math being done in insurance. So it brought me back to that world. And I've pretty much resided in that world. What I've tried to do recently with the MGA and the work that I will be doing is trying to figure out how we can solve issues around the protection gap. And I use all of my experience and expertise in modeling. I use all of my experience and expertise in insurance to try to bridge the gap between the capacity that exists in the world and the demand for insurance coverage. And it's not an easy job, Jocelyn. So
especially in flood, that is not an easy job, but it's one that's an important one right now. It really is. And it's interesting because with your background and having come from QBE from Marsh, pivoting to becoming an entrepreneur and a business owner, and an innovation guru, of course. But I mean, really, that's a big change. There's a lot of people that I talk to that, how long have you been at XYZ large insured? It's 30 years. Okay, 25 years. So
Yeah.
what led you to take that leap of faith in yourself?
So I was forced to, because the industry was just with the all of the changes that were occurring in technology. I was sitting there I was living in New York City during Hurricane Sandy. So I remember that specifically. I remember the aftermath of that in personal situations that occurred where it was just like, what are we doing? Like there are so many people that were left homeless, who had flood coverage and other coverage, but they were still homeless. And um, it was just obvious to me that the industry itself was not interested in solving that problem. When I would bring that problem up to folks, at the two firms that I worked with, they just weren't interested in solving that problem. So it's at some point, it was just like, if I don't do something, no one's going to do anything.
Wow.
So I may have over exaggerated my my potential contribution to the solution. But with that said, I think we brought a lot of really interesting ideas to the table. So it was like biting the bullet, so to speak, and
Yeah.
just having to take a leap of faith.
Well, and I thank you for that, because I think that's, it's such an important and critical part of any industry is that there's people who are willing to take risks to see the gaps, and not always knowing when it's that perfect market fit, but knowing that there's a solution, that there's a need for a solution, and working towards finding that, because that's not an overnight journey. I mean, that's something
No.
that you every single day you're working towards, and it's a
Yeah.
lot of work.
So
Yeah.
Jocelyn, I knew, so when it came to like flood, for instance, I had done my homework. This wasn't, at the prior two firms I worked at, I had done my homework. I had presented evidence that I thought like, hey, I see this convergence of events occurring. The NFIP is struggling, right? The government doesn't really want to be in the business of insuring flood. They're just kind of stuck in it. They do a really bad job of it. And there's still huge pent up demand for coverage. That aside, I would still get pushback on, because the NFIP has struggled, what are you going to bring? What can we bring to the table that we're not going to have the same result? I mean, they have lots of resources to be able to throw at this. And that's where I was able to tap into the toolbox of skills that I had. And I just knew, like, I was not satisfied with the answers. So when I would have serious discussions about flood, I would get, well, flood, you really can't make flood profitable from an insurance standpoint because there are going to be too many claims. And I'm like, that's not a good enough answer, because if that's true, so this is where my science background came in handy, because logically, if that's true, then what follows from that is, how is every home in Florida insured for wind? It's the same problem, but we can do that. So it just seemed obvious to me that there was lethargy in the system. They didn't really want to solve the problem. There was no incentive to solve the problem. So all I had to do was put in a rudimentary system. And the thing is, like, we kind of nailed it right out of the gate. We came up with an underwriting process using models and data and fallback, right? Like, really complicated decision trees on, if you don't have the data, what do you do? How do you make a decision? It took us a good year to sort of scope all of that out. But the system that's being used today for underwriting has not dramatically changed in the last 4 years. And I still think it's the best underwriting system for flood that exists today, for US flood. And so I think a lot of that just comes back to Some of it is luck, some of it is luck of timing on it, but I think it was the problem, I think, was over exaggerated of how difficult it was to solve. And what I learned from that, Jocelyn, in future endeavors is that we have enough, as insurance professionals, we have enough tools in our toolbox to solve lots of problems. It really comes down to wanting to solve the problem. That it
I
boils
think
down
that's,
to
you
that.
know, it's funny. One of the questions I have for you, and I feel like it answers it, but it's whenever I look at, you know, our industry, and there is so much changing. You know, there's obviously the pandemic, there's social changes,
Mhm.
you know, climate change, which obviously flood specifically is impacted in services, but also it's, you look at how little has, I feel like all of our core systems have stayed the same when we look at the insurance modeling and even the tech that consumers are using today. And when insurers are looking at how they should be improving, I mean, how do they get to the point of being able to create more personalized or localized products? I mean, it does feel a little like one size fits all. And we know now that it can't be, because there is so much rapid change. So how do you
Oh
move that
yeah.
core system and start to steer that shift? Is it people like yourself breaking off and tackling these individual problems, or yeah, where do you see that
I
happening?
think that's part of, I think that's part of the solution. You know, part of my thesis around where insurance is going to be and where it's going is that there are a lot of insurance companies out there, a lot of
Yeah,
carriers. There's a lot of trapped capital in there, and a lot of these companies, I'll just be frank, just don't have any business existing, right? Like
that's pretty
commodity
frank.
product,
Yeah,
commodity product, you know, has not really changed dramatically in the last 30 or 40 years.
right.
And I think we can, you know, we can do so much better. So I
Yeah,
don't specifically have an answer for like how a legacy carrier can make that transition, because it really goes to the fundamentals of the company, its culture. It's going to want to make those changes, but
yeah,
I will provide a warning to anyone that's got pull at a legacy carrier. Um, it was Brian Falchuk and I kind of had this conversation. It was probably prudent in the past when you had the possibility of being like a first mover in a market to not be the first mover, right? Like in insurance, you can be a fast follower, and that's probably a safer route to go. Let someone else go first. Let someone else take the losses, learn the ropes, and then you can you know, jump on, right? I think that paradigm is changing dramatically. And Jocelyn, it gets into some of the things that you hinted at, which is consumers have changed.
yeah,
Digital technology has changed the consumer. So the easy part, the low hanging fruit is it's changed consumer expectations. Everybody knows that. That's we don't
right.
we don't even have to discuss that very much, because
Well,
I think
even how they
everyone will agree.
access insurance has changed. You know, we've done a lot of work, you know, even at Bindable within the affinity space, which used to be my alumni association or AAA would offer me my insurance, but now there's this massive footprint. So even consumers where they can buy and how they're educated on insurance is this, you know, it's just a
Yeah,
bigger world for
it
them,
is.
just in regards to insurance, let alone everything else that they're
It
marketed to.
is.
Yeah.
But the issue that's popped up is deeper, right? It's the exposure has changed. So for nearly 100 years, homeowners has kind of been homeowners, right? Fire has kind of been fire, and things like that. Technology is literally changing our exposure. So the clearest example is auto, right? Think of from the 90s all up to now, think of all of the technology that is now crammed into a car.
Right.
Alarm systems. Alarm systems have dropped thefts so dramatically that it's not even like really an issue
Right.
anymore,
You don't
right?
really need low jack anymore. Like, you know,
No,
right?
you
Yeah,
know,
it's all, but it is, it's
LoJack's like
like,
a
that's all
plan
the
B,
deterrence. Yeah. The
you know.
deterrence.
So that has dramatically changed loss costs,
Right.
right? But now we have the Medusa, like the trifecta of sensors in vehicles, right?
Yes.
Smartphones and ride share, right? So literally the way humans think about transportation, the way they get around, has dramatically changed over the last 10 years. Like no one can possibly deny that. And now go 10 years into the future, we will at some point have autonomous vehicles, right? So the whole thing means if you're an auto insurer, right?
Yeah.
How do you survive?
Well, how do you
If
run it?
you're
Because it's really a warranty issue at that point. If it fails to perform the way it's
it's
supposed
a
to, right?
commercial. It
It's a
becomes a
commercial. Yeah.
commercial exposure.
Yeah.
So if you're a mid-size auto insurer or smaller, right? How do you compete? You don't have the resources to build out technological solutions, right?
Yeah.
The exposure is changing. By those companies absolutely will be adversely selected, right? All of the good risks are going to go to the better companies, and those mid-size and lower are going to get all the bad risks. It's not a question about whether the company will be disrupted. It's that they will be a continuously deteriorating financial result that they're going to have to explain to stakeholders, investors,
Yeah.
or whatever. It's not going to get better. Like it's not even going to flatline. It's just going to trickle down,
Yeah.
incrementally get worse for them over time. So that leaves a lot of capital that's sitting there that could be put to good use, that won't be put to good use. So my thesis around this is that those companies have to really dig down, have significant offsite meetings, and really think about who are they and what is it that they're trying to accomplish. Because if my example, if you're a mid-size auto insurer or smaller, right, and you're thinking like, oh, 10 years from now we're going to be an auto insurer, I would say no. Like you will be like you will be an afterthought in the market, really struggling, scratching your head. And that is not something you're going to be able to dig yourself out of. Like the solution for 10 years from now, you have to start planting the seeds now. So I do see, from an entrepreneurial perspective, companies like Loop, for instance, which we're both familiar with, taking the bull by the horns and essentially being able to use the capital that exists in these mid-sized companies or whatever in that particular example, and just doing a better job. They're better. A lot of carriers will be better off just renting, leasing, licensing their internal resources, including capital, and just let someone else do a better job.
Yeah, I think it's great because it's, they always like when you say disruption or, we're going to disrupt the industry, it's not, you're right. It's like taking the idea and making it better, because better is additive. You're adding that layer and thinking about it differently and approaching it and having that kind of confidence to do it. It actually, what's funny is like going in the Wayback Machine, I was reading something you wrote from 2015, like the stalker that evidently I am, but I was looking at what you had said before about the future of insurance. It's not about the disruption. It's like using technology to be streamlined, less clunky, more efficient. But one thing that you said that really the disruption itself would be having to replace the industry leadership and using tech to change business models. And it sounds like from what you're saying, that still is how you're thinking about it, which is the disruption is the tech's enabling, making it easier. It's there for us to leverage and use. And it needs to be like either a leadership or a mentality change as to how they're looking at their business.
Yeah, when you reminded me of that article and I started reading it, I'm like, I can't believe I wrote this. Like, this is good. Like, wow, I didn't know I had it in me.
I still will, like Harvard Business Review will post something and I'll be reading like, this is great, it's from 2015. So, if you got ahead of yourself, that's great. I mean, republish it because it's a good piece. But
I should.
Love to link it.
So pretty much everything I wrote in that article, I still believe. A lot has changed, no doubt. Right. So I think we have hit an inflection point. Right. So you've seen companies like Lemonade and Hippo and the list of companies that have made a dent, gone public, just made a stink in the market. They have changed everything. I am
Yeah.
now on calls where, um, the conversation around like, can we have a experience like Hippo provides or Lemonade provides? So that's become table stakes now, right? So they made their stink, and it did dynamically change the way we as an industry think about things, right? So hats off
I
to
know on
them.
the digital front end, that usually means that they want to see one question on a page, but
Mhm.
it is those, but it is game changing. It's like finally thinking through the consumer lens, which is,
Yeah,
I don't want to, I know I'm going to have to answer maybe a million questions, but what can you fill with data that I've already willingly shared somewhere? And can you put it visually just somewhere that I'm used to? And just
yeah,
that, I think, creates a better relationship. And the
yeah,
reality is we're in an industry where it's sold. It's like our auto, it's required. I mean, you're forced to purchase. So
exactly. Like it's and that was one of the things that I was really trying to think through when I was projecting out was, well, even if you make like a superior customer experience, it still doesn't change the dynamic of the back end, which is insurance companies still have to make a good use of the capital. Having a good front end is table stakes. Like it's
yeah,
expected. It's not going to improve anything, right? So all it means is whatever customers you are going to get, you just get them faster and easier.
that's
Well,
right.
if you have a poor loss ratio, that just means you're growing your loss ratio faster. It doesn't help anything. So there's still an element, the disruption that I want to see is the change in the business model.
Yes,
It's a solid business model, but as you said, no one wants to buy insurance. It's got to be sold, right?
it's got to be
And
sold.
I will keep saying that till I'm blue in the face, but
Yeah.
it's no one lines up to buy an insurance product,
They
right?
don't.
It
I mean,
is
the hope is that we at least offer it somewhere relevant, but it's still sold. It's
exactly,
still a reminder. Yeah.
exactly. So it's that relevancy that becomes important, and that's a massive challenge because um, when or how do you reach people when that in that point of time when it is relevant, and then how do you craft a marketing message to get them to then come through the system, right?
Right.
So that to me it's I think insurance is a phenomenal monetization vehicle, but as Avi and Sheffy from Coverager have said many times, they don't believe that insurance companies really have justification for being a consumer facing brand. I kind of believe that, right? It's just
Yeah.
my thesis is 10 years from now, um, you will, because of the relevancy that you talked about, I think people are starting to finally figure that out in a deeper way. And with digitization, you can do that. That the process of like, oh, I'm in the market to buy homeowners insurance, I think that's going away. I think what you'll see is that embedded element where they won't be thinking that because smart marketing companies will be proactively getting in front of their train of thought around that. So
No,
um,
I think it's huge, and
yeah,
I think it's where I see, and we work with a lot of different partners and a lot of especially emerging brands that are coming into the market, and they know that they have relevant data, relevant
mhm,
points in the journey, auto refinance, home mortgage journeys, a pet journey, whatever it might be. They have this opportunity that they see. And I think sometimes not only the brands themselves, but even incumbents, when they want to go into a new space, they get overwhelmed by it. They focus on an endpoint, this perfect, blue sky endpoint of what it should be. And there is so much tech out there to leverage, to
yeah,
do the test, learn, calibrate. There's a lot of entrants who want to be an MGA. They're like, I see this market, I know it's here. And we work with those partners every day because we do have, and this is not a sales pitch, it's just a reality. We have, tech that allows them to pick carriers and choose and learn. But I always say, it's like, yes, you'll make money from the test and learn phase, but it's not that, it's the data. It's like getting the ability to start to
Yeah.
crack the code on who's buying it, when they're buying it, what they're buying. And that data to me is, I
Yeah.
think, a step that a lot of companies skip too quickly because they're working off of, back to your science, working off their hypothesis, and they're not getting proof points outside of the monetary ones, and
Yeah.
that's, to me, something that,
Honestly, like I don't think I could say it any better than that. Like it really comes down, it's an existential decision, right? I just don't see how a company can label themselves as an insurance company in the old school definition of
yeah,
doing that in the future. I don't think there's any value there unless it's that alternative I described, which is you're renting your back office, you're renting your capital to someone else. It's folks like yourself, it's the marketers, the Loop team, the data science, the marketers who are coming in and figuring out when the relevant elements are and putting the correct product in front of the correct people at the correct time. And so with that mindset, you are in a data company. Insurance, if a typical
that's
insurance
bingo. That's
company
exactly
cannot
it.
make the
Yep.
transition to being, we're not an insurance company, we're a tech company, we're a data company, we're an analytics company. Like if they can't say that and figure out how to structure the entire culture of the organization around that mission, then they're essentially left to be a commodity player in the space. Still not the most horrible thing in the world, but what they're going to have to do is basically license their capabilities to someone that is doing the data, the analytics,
That's right.
the marketing, those
It's,
things.
I think I love it. I mean, it just speaks to me because in insurance, we talk a lot about product, and product we think of as, the actual insurance product, but it's shifting and saying, no, product being the tech, being the data, like the actual, offer that time. That's really, it's like looking at your technology the same way and evaluating, how you're getting that data, not dumping it into a lake, but actually using it in
Yeah.
actionable ways. It's
Uh,
it's game
but
changing.
it's like the traditional legacy insurer is going to be stuck with our claims data, our exposure data. And it's like, look at Loop again, right? So Carrie Ann is an open source wizard,
Yeah.
right? Like it got, MIT related education around finding open source data, pulling that in and using that as an additional source. So they'll have claims data, their own data, and they'll have external data that they can use to enrich models. How can someone that only has the claims data compete with that? I'm positive that Progressive does the same thing, that there's, whether it's social media or to Loop's thing, they're getting all the traffic data, right?
Yep.
That's open
Right.
source and grabbing that. An interesting company that I've been engaging with is in the commercial habitational space. So they're a software company, right? Subject matter experts in how to run habitational units, like big ones, big family apartment complexes, stuff like that. Subject matter experts, and they've accumulated so much data through their software platform that they can now predict losses. They're not even an insurance company. So they already know how to sell. And so to them, it's like, well, us as a software provider to a niche industry that trusts us to use
The
our
Holy
software to
Grail. Yeah.
run their operation. Like we know more about their business than any insurance company could possibly know. And so they've made the really wise decision of like, we can bring insurance into this as well, because they're guiding their customers in loss control,
Right.
protocols, compliance. So they can tell, right? They can tell from the data that they're collecting from whether the company's behaving in such a way that it's predictive of loss. So they're well ahead. Like how can a traditional insurance company with only exposure and loss data compete with that? They can't.
Yeah,
They
they got to
cannot.
start thinking differently and engaging and looking at it as that's the potential of what can happen. But no, I mean, this is great. And I love having the opportunity to connect with you on these topics because it always gets me thinking and it gets me looking at the market differently. And before we wrap up, I always, we're talking predictions. Is there any kind of insights or, we've named a couple companies to watch, but any advice for the audience just to kind of help them navigate the 2022?
We all thought 2021 was gonna be a significant departure from 2020, and it was worse. So,
Let's hope for better.
we'll hope for better. But I would say that I hear words like minimum viable product. I hear agile. So the influence of the technologists who have come in has taken hold.
Right.
Right. So
It's
my
encouraging.
prediction is that the pace is gonna pick up on what people are doing. I still see like so many mistakes and errors. There's still this mentality in insurance that's so bad, Jocelyn, around, walking that tightrope of trying to build something new, but also scaling at the same time. We as insurance professionals, I hear it all the time, like they can't help but start to project out of what this test phase will look at the scale. And so they'll say the words agile, but I don't think they actually know what that means and not sure if they have the stomach for risk on,
Right.
failing those validation steps.
Right.
But with companies like Loop, Hippo and stuff like that, like I think the pace is going to pick up on
Yeah.
what's being done. The digitization 2022 just, I think, continues that trend. So anyone that's listening that has pull, right? Like if you have not made these decisions, like you got to do it now, because in 2, 3, 5 years from now, it'll be too late.
Right.
You
And
can't
let's
do it
not
then.
stigmatize failure. If failure doesn't mean that it was poorly executed. It just means that it's time, that's the
Mhm.
learning to keep going. And that
Mhm.
I love that
Yeah.
because it's true. I think a lot of people use buzzwords internally and it's not
I
the
learned this
definitions right
agile
there.
thing.
Yeah, exactly.
Yeah, it's a little
You're
little
getting
deeper
there.
than that.
I think this is great, and I appreciate you joining me today. And thank everyone who has listened in. And I encourage you to reach out to Nick and to myself on LinkedIn. And we love
Please.
expanding the conversation. And if there's any questions, we're always here to follow up. So thank you, everybody, and thank you, Nick.
Thanks, Jocelyn.